Welcome to another episode of Mortgage Matters, every Wednesday with Team Adwar. Here's your host, Todd Adwar. All right. Welcome back. Todd, it must be Wednesday at 11. We're back with another episode. We did take last week off for Independence Day, right?
Well, we did a quick
short show. That's right.
A quick mortgage update. But yeah, how was your fourth?
It was wonderful.
Yeah,
it was hot and sticky, but we had some fun nonetheless.
Yeah, very hot. Hit the beach. You can see I have the tan now.
Yeah.
You know, summer is officially here. That's my kickoff for summer, July 4th. I think that's a lot of people kick off in May, but not me. July 4th means time to relax.
We're in the thick of it.
Okay, so I wanted to start the show how we do every week, which is the Mortgage Matters update. The rates for the week actually came down, and I think they're going to continue to come down. Rates for the week, 703 for a conventional 30-year fixed. If you're putting down less than 20% on a purchase, the FHA seems to be a better option, still is, at 6.5. 15-year fixed is coming in at 6.44. And jumbos are down to 7.24. I could see rates coming down shortly, and let me tell you why. So the federal chairman, you want to put that?
Sure.
Put that up. Federal Chairman Jerome Powell, he says the central bank has started discussing lowering interest rates. And that's the first time he's really said that. And what he did was he led everybody to believe that the central bank's focusing more on when to cut interest rates now that inflation's, cooled off.
Right.
And his quote is considerable progress towards its goal of defeating the worst inflation spike in 4 decades. And what does that mean? He goes on to say inflation has eased notably in the past 2 years. He added that it still remains above the central bank 2% target, but jobs are getting a little bit less out there and income's rising less. So I could really see, one, maybe 2 cuts, maybe one in September and another one this year. And only a couple of months ago, Tim, we were talking about 0 cuts for the year. So that's pretty exciting news for anybody watching. If you don't own a home, I'm going to recommend that go out before the rates drop, because the prices are going to go up once that first drop comes in September. So you really want to be there before that happens. Also, if you got a high interest rate, you got something in the 8s or the 7s, certainly you should give us a call. And we should talk about refinancing you into a better rate, lower the payment, and you actually skip a month or 2 worth of payments, which always helps. Anyway, while we're seeing the Fed say, hey, rates are going to come down, the media continues to bash housing. And I don't know why that is, Tim. It hurts realtors like yourself. It hurts, mortgage folks. It hurts real estate attorneys. Some recent articles in the press, I'm going to read you the headlines. The bombshell that will transform the housing market. Home ownership can bring out the worst in you. Maybe treating housing as a mistake was a bad idea. Data signals housing market disaster. So, I mean, who would want to buy a house if that's the case? And also, I wonder why when Wall Street goes up by 20%, Tim, they're so happy. They're thrilled. Wall Street up 20%, blah, 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 blah. Even though most people don't have stocks, except for maybe their 401ks. But when home prices go up, when your house, when my house, when Olivia's house, our homes go up in value, that's a bad thing.
Right.
For some reason, they treat that as a terrible thing. Oh, my God, our homes are worth more money. Can you explain why?
Well, the 45% in the last couple of years has made it difficult. The 45% in the last couple of years it scares a lot of people.
Right.
From moving up. But I understand the point altogether. They don't like real estate to do well.
Really, they don't. So we've talked in the past about 10 cities listings, how many listings they have, 10 cities that have gone up in value, 10 cities that have gone down in value. So I thought today we'd look at the Clever Real Estate study of the top 50 cities for agents. And what are they? The study's based on a weighted average of 15 factors such as affordability, annual salary, number of agents per 100,000 residents, and the annual home sales per full-time agent. And the best cities will surprise you. Detroit is the best city in the country, according to Clever Real Estate, to be a realtor. Buffalo, New York comes in second. Kansas City, Missouri, Tampa, Florida, Richmond, Virginia, and Hartford, Connecticut rounds that out. So something close to you, Tim.
Well, almost as close as
Buffalo
too. But Buffalo's not far either from me, but you know.
Oh, is that right? So I thought that was interesting. A lot of realtors are struggling, for the last couple of years with the amount of houses not selling and houses being down.
Yeah.
But in these 10 cities, apparently, this is where you're making some money. And Buffalo, the average realtor is making $83,000, which is a pretty fair amount of money, in the Buffalo area.
Yeah.
So I wanted to introduce somebody I've known for a little while. She happens to be a phenomenal attorney, real estate attorney. Not only is she a real estate attorney, but she's a bank attorney for closings as well. Olivia Rosario, just incredible. So let's bring her on.
I'm trying to bring her up, and it seems that I think I can hear her. Olivia, are you there? Maybe she'll try and log back in.
All right, so log back on. I know she was having some technical problems, but while we wait for Olivia, I was at an event last night, Long Island Real Estate Investment Club,
right.
And the person who here's Olivia. We'll
Sure.
get to that story later. Hey, Olivia, welcome. Thank you for joining us in Mortgage Matters.
Thank you for having me. Thank you. Good morning.
So, can you tell everybody how long you've been involved or been doing real estate law?
Okay, well, it's been a very long time. I have been practicing for 23 years. Probably 15 of those I've been involved in real estate. So for a very long time.
So can you tell us, I know that you represent, buyers, sellers, and banks. Can you tell us a little bit about how that experience benefits clients?
Well, it just gives my clients, a better experience, right? Because I know everything from each side, right? So if I'm representing a buyer, I already know how the contract is going to come, why certain things are worded a certain way, because I word them the same way when I'm representing a seller, right? And the same when I'm representing the seller, I already know how the buyer is going to most likely respond to something that I'm going to request, just because I've been on the buyer side. And the bank, of course, because now I know what the banks are looking for. So it's super beneficial when I'm representing a buyer, right? Because then I'll be able to tell him the pitfalls, what to do, what not to do, what the banks are going to be asking for, how we're going to get to the closing table quicker. When I speak to my buyers, I sit with them for about an hour, right? And I tell them, if I'm not representing the lender, I tell them, I'm not the lender's attorney, but I will tell you that I have enough experience to tell you to do X, Y, and Z. Don't do A, B, and C, right? Because it's going to hold you up.
Right. And do you give any patented advice to sellers when you're representing the sellers on what they should do or not do?
Well, don't open up a permit. Don't open up another mortgage. And what we do is we will discuss with the seller as soon as we receive the title report to see if there's any mortgages or maybe old mortgages, just so we can get our ducks in a row, right? I don't like to wait till the last minute.
Oh, we lost her again.
We did.
Oh my God.
Here she is. She's back. She's back.
I don't like to wait till the last minute, right? To tell my clients, the sellers, let's start working on your mortgage, right? Because sometimes it's an issue, sometimes it's an Asian mortgage, sometimes it's just something that came up that they were not aware of. Let's start tackling it at the beginning because we want to close as soon as possible.
So do you do you talk to them about what the title means and all of that? Because there's so many things that come up on the title, whether it's against the house, against them, whether they have bankruptcies, they have state judgments, all, IRS judgments, any judgments against the house. Do you get that early?
Yeah. So actually, when I speak to my sellers at the beginning, I always ask them if they have any open permits or violations. I will tell you that most people will tell me no, right? Because they don't know, they don't remember. Maybe it's something that they did a long time ago, a violation that they got, they don't remember, they weren't aware of. So I tell them that that's fine. We will wait till the inspection report, oh my goodness, the title report comes in.
Yeah.
Because then we'll be able to better determine. And once it comes in, I'll sit with my clients and I'll say, here in 2014, you open up this permit, you have to go to the town, you have to go to the village, you have to go close that out. Have them come in for the final inspection. We also go through all the judgments that come up. Sometimes it's just based on names that come up. So we'll start to eliminate some of the judgments on the title report based on, their social security number and it not being applied to them. And then we just have to give an affidavit to title stating that it belongs to us or to the seller.
A question I get all the time is, if I have a elderly parent who owns a property, is there any advice you could give me, as to what I should be thinking about as far as their properties are concerned?
Yeah, so a lot of us have elderly parents, and these are conversations that we have to start having with our parents, right? It's not the most pleasant, but we have to prepare for the inevitable, right? So we have to make sure that we are aware of everything that they own, right? Where they keep the deed, because a lot of people, they don't even remember where they have the deed. They don't remember if they have a mortgage. I always recommend my clients to do some kind of search, some kind of a title search on a property, just so they can know what's on the property, so they can know if there's any old mortgages. There's nothing more problematic than someone that passes away and leaves a mortgage that was paid, but the satisfaction was never recorded.
Gotcha.
And that will delay you for months, for a very long time. Sometimes you even have to go to court to try to
You recommend that the first thing I do as my parents get older is make sure they have a will, right? What happens if they die without a will, real estate?
Yeah, that's so complicated, right? Because now you have to go to court, and now
I'm sure you see that a lot. No,
I see that so often, and whenever I go and we do seminars, I explain to people the importance of a will. It is so important. It makes everything smoother. The transition, it's a difficult time when you lose a parent. We don't have to add more stress to that event by not having.
Let's see if we can get her back.
Yeah, we'll get it. We'll get her back. So like I was saying before, we had a buyer come into the office and didn't have a will at all.
Right.
And the next thing I know, they own a house. 2 years later, unfortunately, they pass away. And the wife calls me, and she's now the ex-wife. And she says, "Oh, hey, Olivia, we'll get that story out one of these days." So, okay. So having a will is like,
it's so important. It's super important.
You get a house after closing, you should have a will just in case.
Just in case. Well, for the inevitable, because that just in case will happen at some point in your life.
So you've been involved in a lot of negotiations with buyers, the seller's attorneys and so on and so forth. Is there any advice you give, because it's such a stressful time? Is there any advice you give to your buyers?
So when they're negotiating?
Yeah, like they haven't agreed upon price, but you haven't gotten the contract yet, and all of a sudden it's back to negotiations.
So I always tell my clients, you have to read the room, right? So we have to see what period we're in, right? So right now, the inventory is low, right? So right now, unfortunately, the buyers, we can't really be asking for too many things. It's honest, because then you'll lose the deal. We are still having people that are going over asking. It's kind of leveling out right now, but there are a lot of people, there are multiple offers on a house, people going over asking. So at this time, maybe it's not the best time to be aggressive, but certainly if there's anything that comes up on the inspection report, which I always tell everyone to get an inspection report, to do an inspection, do not purchase a house without an inspection, right?
Mm-hmm.
First and foremost. I do have clients that don't want to spend the money because they're buying the house as is, right? But I tell them, if only so that you could know what's coming in the future, it's a good idea. And if there's anything wrong, like with the foundation, anything that's big, that's going to cost you a lot of money, the roof is in its last leg, it's about to cave in or something like that, then you have to think twice. You either have the money, right, that you can fix it because you have to fix that immediately, or you're going to back out of the house. Maybe it's not the house for you. It's not the time for you.
Right. So do you always recommend new surveys? I know the banks that you represent, some require surveys and others don't. Do you always recommend that a client get a survey?
Always.
Always.
But clients opt not to. When you tell them the price, they opt not to get the survey. And I'll give you a story. Recently, closed on a purchase, maybe I think it was November. She didn't want a survey. She didn't want a survey. It was going to cost her $900. She didn't think it was money. Right. Now she's having issues because now the deck, there's no permit for the deck. Now the pool, the in-ground pool, is a little larger than they got the permit for, and so on and so forth. And so now she's coming and calling me like, why did you not tell me about this? And I said, well, we didn't know. Remember when I told you to get a survey? Mm-hmm. No, had we gotten it, all those things would have came to light. So it's really important if you want to know exactly what's on your lot and what's legalized and not.
What happens when, and we hear this with people bidding more than the house, what happens when the house doesn't appraise? Now, the mortgage professional, I call you up, I say, Olivia, we got a problem. I call up the realtor, house didn't appraise. Now, what's your next move?
So we have to go back to the contract, right? Because of how aggressive the agents are these days, sometimes they'll waive appraisal, which I don't agree. And I will always try to talk my client out of it, and I'll always try to negotiate with the sales attorney, right? But if we didn't waive it, right, then I go to the sales attorney, I send them the appraisal report, and I said, your house didn't appraise. Your client has to reduce his asking price, or we have to kill the deal. And usually we negotiate. Usually, because once the appraisal is done, it's done. It's filed. Everyone can see it. And the seller will typically they'll reduce the price. Sometimes there's a little negotiations. The buyer wants the house, so maybe if it underpraised for $20,000, they'll come up 10. The seller will come down. The buyer will come down 10. And they'll work it out.
Are you seeing a lot of people buy homes in corporate names? I know that's what I recommend to people these days, that they transfer the ownership or they put the ownership in corporate names. Are you seeing a lot of your clients doing that or not really?
Not really. I do recommend it to some of my clients, but the majority of my clients come in and they're still buying it under their name.
Do you see any advantages? I know on investment properties, not on primary residence, but on investment properties. Do you see any advantages to having it in a corporate name? Because it's become very popular.
It is, because of TikTok.
Oh, is that right?
Yeah.
It's all over TikTok. That's how you should do. That's what you should do. But I do see an advantage. For tax purposes, I do see an advantage. To limit your liability. So I do see the advantage, but definitely, and I do represent a lot of investors. The investors definitely purchase the properties.
Are you seeing a lot of no mortgage contingencies? Would you let a client walk into a contract with no mortgage contingency? I think that's insane.
Yeah.
That's insane. But it gets negotiated like that. So when some of the agents don't appreciate it, but when my client sits in front of me, I explain to them what that means, because typically it's not explained to them. So I'm going to tell them exactly, you're buying this house, whether you have the money or you don't have the money, you're liable for this house. And then when you
lose their down payment, if
Yeah.
you give me if I give you a $50,000 down payment and I have no mortgage contingency and I can't get a mortgage and I don't have the money to buy the house, Olivia's like, okay, I'm keeping the $50,000, right? There's no.
And you can be sued for more. You can be sued for up to 10%.
Yeah.
Yeah, so you can be sued for more.
Oh, I didn't know that.
Sure.
So even after they kept my down payment, they could sue me for even more money.
Correct.
You'd have to be a lunatic to allow that to happen.
Exactly. But I see it come in. Yes, I see it come in. And I have some clients that even after I explain it to them, they're okay with it. They're like, fine.
So I know that a couple months ago, you told me about a couple of commercial deals that you were involved in. Can you share some of those what type of deals you've participated in or you've been involved in on a commercial side?
Right. So what I do is I'm involved in the supermarket side. So I do transactions, purchase and sales of supermarkets.
Oh, interesting.
I've also done some commercial real estate, but more towards the supermarket side. But
what is the difference between a residential deal and a commercial deal? I mean, the commercial deal must be more professional, I would think.
Well,
Is it?
Professional, but it's more involved. Like it requires more inspections. It requires different time frames, different searches. The commercials. It's a lot. It's more involved. The process is bigger.
Okay. So you represent people from where to where? What areas are you handling?
New York State.
Everywhere. What's that?
Clients as far as Montauk.
Okay.
Albany, Monticello.
Making the rounds.
Staten Island. Because everyone thinks that's a different state. That's because Staten Island. I also cover Staten Island, Brooklyn. So the tri-state area, upstate, Long Island.
Okay.
Todd, I have a question from the audience here. Martha says, how do I avoid the New York State mortgage tax on a refinance? I live in the Bronx.
Okay. Well, I can answer that one for her. So we do something called a SEMA. And what that does is we get the original mortgage documents that you signed whenever you took out your original mortgage, and we get those documents so that you don't have to pay the tax. So because you paid the tax, let's say you bought the house for $500,000, you took out a $400,000 loan. If you're just getting a $400,000 loan, we could get rid of that tax completely. If you're now getting $1 million loan on your home, you wouldn't pay tax on the $400,000. But you would pay it on the new money, we call it. And you can even do that on commercial. I think you find that a lot more common on commercial loans because the loan sizes are so large and the mortgage taxes are so much that they want to avoid it, at all costs.
Excellent. One more here. Peter Rizzo, the commercial side deals with many financial aspects, NOI, profit and loss, etc.
Yeah, well, when buying a commercial property, you're always, figuring out what your NOI is and what the profits are. There are so many commercial properties. I'm doing so many commercial deals at this point, and the NOI and the cap rates are something that I discuss with all my clients as to whether it's a good deal. And certainly, depending on, I'm working with a client right now on an apartment building that they're thinking about buying. And you look at the rents and you look at how, what percentage of the rents are low income rents, where they can't, rent stabilized, where they can't go in. And that certainly affects the viability of the profits. Also, when you build a new building, sometimes the city will give you 25-year tax abatement. And, if that's running out, a lot of times the sellers, when they get to like 10, 12 years, will say, let me get rid of this thing because the tax abatement's going to run out and the huge amount of profits I'm making is going to drop in 10, 12 years. Now, if your horizon is, hey, I'm going to buy it for 5 years and then I'm going to get rid of it, that's okay. But if you're going to hold it, well, your profits are going to, dive down, soon on that.
And just so I'm right, NOI is net operating income?
Yes, I'm sorry, net operating income.
Sure.
Correct.
Because ROI is return on investment.
Correct.
Just so Peter and everybody else knows what's going on out there. That's all the questions I have live. I think Olivia had to go. But we lost her there.
I think we lost Olivia. Olivia, if you could hear us, thank you so much for joining us today. We know that you have a closing coming up in the next half hour and you got to run. So we appreciate it. And we'll see. Olivia, is just a pleasure to be at the closing table with. Anytime there's a problem, if you don't have an experienced attorney, they make it worse. And Olivia will just, hey, I've seen this before. This is how we get around it. The sellers calm down. The buyers calm down. And a little while, later, the keys are being exchanged, to the property because of her experience. We were just bragging about you, Olivia, and how terrific you are. Do we have Olivia's phone number somewhere and her email address that we could throw out there to the clients so they can get in touch with her?
Yes. Well, it's on the main screen. So what I can do is head that overlay up. You one more second.
Olivia, tell them how they can get in touch with you.
Okay, so you can reach me. My office number is 516-517-2340. And the email address is Rosario, like my last name, ROSARIO, lawny@gmail.com.
Pleasure having you. We'll talk soon. Thank you so much for coming on.
Everyone, have a great day.
Thank you. Welcome to another episode of Mortgage Matters. Every Wednesday